classic candlestick analysis. We're seeing Nike's transformation into a classic fallen angel. It's a great chance to buy a good company at a very attractive price. That is a huge misconception. Real life is one thing, but the stock price history is a completely different story. Always look for an instrument that is growing. Hello, friends. You're on the Old Trader channel. My name is Vladimir Karasev. I'm a trader from Russia. And today we're going to talk in detail about an amazing story about Nike. We'll talk about the stock history of the company created by, in my opinion, a truly amazing, fantastic man, Phil Knight. By the way, I recommend you read his autobiographical book. It's a very interesting work. Well, after the company was founded in 1972, it went public at the end of 1980. And let's look at the history of the ups and downs of this company. And most importantly, friends, in this video, we'll understand at what point the company began to turn into a fallen angel. That is a company that will never return to its former peak values in terms of its stock price. And before we begin, friends, a huge request. Please like this video and let's jump straight into the situation that triggered the company's decline. And again, this didn't start yesterday or even a year ago. And here's the most important thing, friends, how to spot the moment when you should exit a company, sell its shares, and most importantly, avoid holding onto a company that's a classic fallen angel. So take a look. After the spectacular growth we saw in the company from August 2020 until November 2021, after that, my friends, it's classic candlestick analysis. After that, we saw a drama, or rather the beginning of a drama that started in the company in January 2022. So for over 4 years now, the company has been in a downtrend. And unfortunately, despite all the love for this company and its products, if we're talking about its stock history, we're seeing Nike turn into a classic fallen angel. And look, what's important to understand is why you shouldn't hold a company when an uptrend is ending. And most importantly, my friends, how do you spot the moment on the chart when the trend is over? If we're talking about classic candlestick analysis, the basic understanding of it, then on any trend there's impulse correction, impulse correction, impulse correction. And if at some point during a corrective move we go below the minimum values of the previous corrective pattern, then that's it. At that moment, you need to exit the company. And it's important to understand this. You'll never be able to sell a company at its absolute peak or buy it at its absolute bottom. It's better to enter trend movements and exit them once you see those movements ending. And again, it's impossible to see the end of trends at the peak values of stock quotes. It's just impossible to do. We can only see the end of a trend movement when we have a breakout of the minimum values of the previous corrective movement. And look, impulse correction, impulse correction, impulse correction, impulse. And pay attention to what happened in January 2022. In January 2022, the lower candlestick shadows minimums dropped below the previous corrective movement's lows. Within this rising impulse, this incredibly powerful rising impulse, back then, many thought the growth would be endless, that after breaking the 180 level, we'd hit 200, 300, and so on dollars per Nike share. But friends, a company's product is one thing, that's real life. The stock price history is something else entirely. You can't fall in love with a company here, and you certainly shouldn't marry its stock. So it's crucial not to miss the moment when the trend ends. Notice that in January 2022, we dropped below the minimums of the previous corrective model, and that was it. You have to clearly understand that the game was over at that point. And look, more than 2 years have already passed since then. As a result, the price dropped from around $180 down to $40, meaning we lost over 70% from the peak prices of Nike shares. And my friends, it's very important to understand this next point. This is the massive problem with buying stocks during a downtrend. Why? Because it seems to us that a low stock price or buying during a downtrend is a great chance to pick up a good company at a very attractive price. But that's a huge misconception, my friends, because if we're talking about real life, then yes, it's a good idea. If a TV in a store used to be $200 and now it's $150, buying it at such a huge discount is a great idea. But when it comes to company shares, it's a huge mistake, because if the stock price is falling, it means there's some fundamental problem within the company. So what you need to understand is that a problem exists. We might not know what the problem is exactly, but it's there. That's why during a downtrend, big capital, professional managers, and major traders never buy the asset. And using Nike as an example, we can see why that is. Because stocks can keep falling for years. Remember, some stocks, we won't get into that today, can actually fall for decades. So friends, always look for an instrument that's growing, one that's in an uptrend. An instrument where corrective movements don't drop below the minimum values of the previous corrections. That's what happened with Nike. Right here, notice how starting from 2012 and all the way up to 2015, we grew with corrective movements. Please notice impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction. And now the next impulse doesn't go up, but right here we go below the minimum values of the previous corrective movement. And it was exactly here that it became clear that that's it. The uptrend is over. And notice, we didn't realize this at the peak values, not right here, but only at the moment when we went below the minimum values of the previous corrective movement. And this is important to understand. Exactly the same thing when we start an upward trend. Why? Because we have an impulse, a bounce, impulse, bounce, impulse, bounce, impulse, and then we go, notice right here, above the maximum values of the previous bounce. This indicates that the downward movement is finished. Friends, such a simple skill will allow you to stay in a stock until the right moment, not to overstay the end of a trend, whether downward or upward, and always stay with those companies that are in trend movements. This is the most important thing because the main money, the big money, is made precisely in trend movements. And I want to emphasize that you shouldn't try to buy an asset at the minimum price and sell it at the maximum. This is a very flawed logic in decision making. The main thing is to see when a trend movement starts forming, look for trade setups there, and hold the position while the trend is in force until it loses relevance. So speaking once again about the Nike company, I think just like most of you, I sincerely wish the company good luck. I also wish the company growth. I want the products that Nike produces to get better and better every single day. But nevertheless, my friends, real life is one thing and stock market life is a completely different story. Therefore, unfortunately, there can be no talk of any purchases. So friends, pay attention to this kind of philosophy of working with company assets on the stock exchange. Because real life is one thing and the stock market price history is a completely different story. Friends, that's all for now. If you understood my point in this video, be sure to like it, leave a comment, whether you agree with me or perhaps have a different opinion. I always read all of your comments. Good luck, profitable trades, stay in the trend. We'll hear and see each other soon.